Hey traders, welcome to the Profitable Traders. Are you struggling as a trader, consistently losing money in the Forex market, and you feel like giving up now on trading? Well, there might be a piece that you're missing in the puzzle, and that piece is right here in this video. I'll show you a systematic approach used by pro traders with the example of a winning trade that you see on the chart. And before we dive in, smash that subscribe button and the notifications bell so that you'll be alerted whenever we upload new videos every week. Let's dive in. I've used a simple strategy on the winning trade that you see on the chart here. This strategy is purely price action. As you can see on the chart here, you don't see any indicators. The only things you see here is this green zone and the red zone as my support and resistance. These are the only tools that you see on the charts, but it's purely based on price action, and anyone can learn this simple strategy. I'm going to pass you through a systematic way, and you can take this strategy, you backtest it for yourself and trade it and see whether it is profitable or not. This strategy is based on key levels of structure. By identifying key levels of structure on a higher time frame, then entering on a lower time frame, you can bank in a lot of pips, as you can see on this chart here. And I think I do have a screenshot that I took when I just took this trade, and I'll put it in one of the corners of the screen so that it will be a proof that I truly took this trade. It was a 1 to 2 risk to reward ratio. Over 90 pips in profits. Wow, with this simple strategy, and I'm giving this strategy out for free. All that you have to do is to subscribe here below and give this video a thumbs up, guys, as a support my channel for me to continue making more videos for you guys to benefit and for me to grow my channel. With that being said, let me first go on a blank chart and explain this strategy. What you have to do is to go to a higher time frame and identify your key levels of structure. That can be your key levels of structure, support, and resistance. These key levels of structure should be the levels of structure that have been tested multiple times. Let's say this support level was tested here as support and got rejected, went up here, went here, from here. What do you expect when the market comes back to this support level? We've seen that this level was tested here as support, and this level was tested here as support. So this becomes a level of structure that has been tested multiple times. And if the market comes back to this level, what's likely to happen is a push up from this level, because so many buyers are looking at this level and waiting for the market to come to this level, and so many sellers that sold this market from this point are taking their profits off at this level. This is the simple strategy that I used on this trade. I identified my key levels of structure here, and this key level of structure, which is the support level here, was tested here as support, and it was tested here as support with multiple weeks rejection. So when this market came back up here, and it was also tested here as support, so it's being tested 3 times as support, and every time this level was tested, there was a price rejection at this level. So this market came to this level here for the 3rd time, and it was rejected, encountered another key level of resistance up here, and it was rejected, and it came back here for the 4th time. When it came here for the 4th time, what I did was to go to a lower time frame. This case, it was a 4-hour time frame. and I just saw this price action, what the price action was doing here. We've seen this market, see these wicks here, these wicks indicate that this price is being rejected at this level. The traders that sold the market at this resistance level are now taking off the profits at this zone, and also the buyers that were looking at this level of support have now entered the market, and these have now entered the market, and that's why you see this rejection. The sellers attempted to go further selling, but they could not go past this level. With this rejection of the wicks, this is where I saw that this market is likely to change the direction. I entered here with a 1 to 2 risk reward ratio and over 90 pips in profit. Within a few days, my position was filled, and this was a profitable trade. So what you do is to identify your key levels of structure on a higher time frame. With this example, it was on a daily time frame. You could also go to a weekly time frame. On this weekly time frame, we've also seen that this is a strong level on a weekly time frame as well. Here rejected, and here rejected at the support level, and when it made the third attempt on the weekly time frame, I got into the trade on a much lower time frame, 4-hour time frame, and it was a profit. So now back to our daily time frame. This is what happened on a daily time frame, and this simple move on this daily time frame is a massive move on a 4-hour time frame, and it was a profit, guys. 90 pips in profit. And I do such technical analysis every single week here on this channel. My goal on this channel is to create hundreds or even thousands of profitable traders, and that's why it's called the Profitable Traders. It's a community where we train traders from scratch. Even if you don't know what a candlestick is, we will train you on this channel just for free for you to become a profitable trader. What you have to do is just subscribe and turn on the notifications bell and just like the video. It helps us with the YouTube algorithms. You can put your comment in the comment section below. You let us know what you feel about this video and what topics to discuss in the next videos. Thank you for watching the video, and I will see you in the next video next week. I wish you a good week ahead.